Welcome back to Trade 360. I'm Diane King Hall. Time now for the big three stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts. And here to take us through the trades is Don Kaufman, co-founder of Theo Trade. It is great to be with both of you. Don, before we get into your picks, I want to get a big picture thought from you on the setup for today and throughout this week when you think about the broad market action.
Yeah, overall this week is, waiting on Jackson Hole. But yeah, we're starting to see a little bit of a bleed through of some volatility maybe in some of the big tech stocks right now. So I'm hopeful on that front because we're going to kind of turn the corner coming into September and maybe a little bit of a return to volatility, which nice change of pace because markets right now have really been very one-sided. As a trader, we like to see two-sided markets, that markets that go up and down from time to time, Diane.
Yeah, I understand that because, I think some of the guys on the floor just get frustrated. One is just this one-sided action, as you mentioned, and they do like the volatility. And today just feels like a sleepy day. But let's talk about some not-so-sleepy names. You've got Micron on your list as your first trade. It's been outperforming the S&P 500 year-to-date. So what's your view on this now, and where do you take it?
So this is the exact type of trade that I do on these kind of sleepy days, if you will. So Micron right now is a trade for me. It's going to be bullish, and it's all about what we term kind of the gamma squeeze. This is options order flow kind of rushing in as the stock has kind of recently hit this this kind of topping formation. So we're going to look very, very specifically here at this 129, 130 area. If we can get to it, we're likely to kind of explode a little bit higher off of that. Now, it's not necessarily the all-time high, but it's some of the recent highs. And we've seen a lot of squeezes into this, especially anything tech related. So I'm going to take advantage of this by using a call spread. I'm going to go to the September 5th expiration. I'm going to be buying a 123 call, selling a 128 call. So it's a $5 wide call spread done for about $1.77 debit. Again, all I'm looking for here is this squeeze, if you will, a gamma squeeze to the upside. That's where, retail traders rush in and buy calls when the stock starts to break to new highs. And it actually forces market makers to turn around and buy stock and forces the stock to the upside.
Okay, Rick, you're up now. What do you notice about this chart for Micron?
So Micron is a ticker I've always enjoyed here. MU, stands for 1/1,000,000th of a meter. That's what 1 micron is. So a very high degree of precision and exactitude here. And the reason I say all this is it's kind of like that's not really what you want to use in technical analysis. You want to use more of the broader strokes and the general price areas here. So, for example, if we were to look at our green line here, that's about where we bottomed out several times around 120. That's about where we topped out. Then we had our breakout. That's about where we bottomed out here. Is it exactly 120? No, but you're looking for kind of the general area here. And what we have right now, as Don was saying, is kind of an interesting setup. We have basically a bull pennant type of pattern here, where after a jolt to the upside, we have a brief period of sideways to downward consolidation here. The bulls eventually would hope that they would retake those old highs near 129, 130 or so. And it depends. If you look at the high close versus the intraday highs, that's about where you'd look at 120, 128, 129, 130. Once again, kind of the general range, looking for that breakout area. So 120 is our support. We're right about at that supportive point now. If we do start to break lower, we could test our trend line here or these low areas. So perhaps around 120 would be another area to watch. If we were to look at our other studies, volume profile and standard deviation channels, we can see that for now price is hanging on to this smaller volume node at these elevated levels here. So it's kind of an interesting potential tipping point here. The upside breakout could lead to new highs, but we have our +2 standard deviation channel just above as well for a potential idea of where we might find resistance here. But if we do move lower, if we break down below that 120 level, that could be perhaps leading to maybe testing this other volume node here around that 110 level.
Okay, all right. So, Don, Rick just went through some of the levels that he's paying attention to. Is there anything that you are watching for in terms of especially the timeline of this trade that you have to be mindful of in terms of any risk?
Yeah, no, it's a relatively short duration, but the big risk here is Is it finally time for tech to sell off? I mean, that's really, to me, the only risk. If we keep the status quo and we keep this kind of grind to the upside, then the mood trade works, and ultimately, if you get some volatility in the near term and you start to see sell side in tech, it's not going to work. And that's one of the reasons I come in here with very defined risk spreads. I like to have a risk mitigation tactic that's not hands-on, a risk mitigation tactic that says, like, look, we have $1.77 at risk here, and if we are wrong and the market spins back down, we're going to be just fine.
Okay, all right, let's talk about the next one on your list. You're looking at Altria. It has also been an outperformer year to date, but I think you're taking this approach that the good times may not keep rolling here. What's your view on this, Don?
This happens to be one of the more shocking charts that we're going to look at. So I'm very interested in what some of the technicals that Rick is going to be bringing up over here, because what you basically have is a stock that's literally smoking to the upside. I mean, the most recent move from 58 to 66 doesn't look like much. It's a 15% move, okay, in a very brief period of time. And the thing that's bothersome on this one is this is low beta. That is, the relative movement to the S&P 500 is supposed to be about half the S&P 500, yet it's outpacing right now. So one of the other things that's also shocking from a kind of a technical perspective is I look at the weekly options expected move. And just give you an example. If expectations say we can move, $3, this stock has exceeded it. It's moved $4. It's done that in 3 consecutive weeks. So the stock itself is outpacing what any of the option marketplaces had anticipated. And that's literally billions of dollars is like literally wrong in the options marketplace. Well, I'm going to hop on board. I'm actually going to take a bearish position here, looking for the stock to actually pull back and really some of this upside to kind of cool off a little bit. I'm going out just to the September 26th options expiration. I'm going to be buying a 65 put. I'm going to be selling a 60 put. So once again, I'm going to go into define risk. I'm going to pay $1.15 debit for this. Again, taking a stab at a bearish trade. I know I'm in the way of a freight train. I like being in the way of a freight train, but I'm doing it with defined risk. Okay. And I'm doing it structured on the idea that the options marketplace, maybe you got it wrong the last 3 weeks, but it's very likely to actually suffer a pullback. We're in wildly overbought territory right now.
Okay, so Rick, Don says he really wants to see what you have to say about this chart. So what do you notice about the trends in this chart?
Yeah, a pretty big surge to the upside here. Kind of in addition to Don's points, maybe kind of concerning that we're seeing such strength in what's typically regarded as a more defensive name, perhaps signaling, worries about weakness to come across the broader market here. But nevertheless, if we were to take a look here and kind of break down this move that happened more, price largely had a difficult time getting above the area near 58, 59 or so. And you can see that we had a high point right here around 61. From there, we started to trend downward. Price compressed in a narrow, symmetrical triangle type shape here between our two blue dashed lines, increasingly narrowing here. And that would be the point where you would be looking for a breakout either to the upside or the downside. In this case, the bulls went out. We had earnings that gave us a lift here. When we did break out above those levels here, for the most part, we've continued on. And the last chart that we looked at had a bull pennant type of situation, barely even a pause here in these, if you could even call them pullbacks here. But now it's looking like we're pushing above those areas once again, 66.60 being our high today. RSI still overbought, but our trend line was interrupted there. So a bit of a mixed signal here. So when we do consider our other studies, we could look here and say, okay, there's some volume that's built up here near 65, 66 or so. So that would be a key area to watch to the downside for price to solidify if we do start to give back some of that ground. Also quite close to our +1 standard deviation channel, you can see right there. If we were to move to the upside, the +2 channel comes in at 69 here. So a bit of a stretch to the upside. And as we spent so much time in this sideways area here, the point of control is around that 59 level or so. So this is an important level that price has made a convincing move beyond here. A quick thought as well, our 5-year chart shows our +2 standard deviation channel here, right around that same 69.70 level here. So kind of by 2 time frames, we have the similar price point sticking out as potential upside resistance.
All right, Don, let's move on to your final trade. You've got a member of the Mag 7 on your list. Alphabet, Google's on your list. It's been a slight underperformer compared to the S&P 500 now. Hasn't had the same trajectory as other members of the Mag 7, but where do you see this going? What's your take on it now?
All right, so the Google trade is going to be very similar to the Micron trade, that I'm looking for, if you will, a breakout. In this particular case, Google, breakout to all-time highs. That's, I mean, couldn't be any easier than that. Is we're kind of butting up against all-time highs. We start to get to like the 207 level, and we're going to explode off of it. So once again, we're in a situation where the stock's kind of slowly creeping up. There hasn't been much of a pullback, kind of aligns very close to the 205, 206. When it hits 207, look for the options order flow to come in here and actually do the rest of the work for you. And that's exactly what these gamma squeezes are all about. They've been very, very effective in a marketplace that's been kind of grinding. You know, traders like myself, we're looking around all day and, you know, what's to trade? And, well, we look for gamma squeezes. And that is things that are kind of approaching an all-time high. You let the rest of the order flow do the work. Stock explodes to the upside. In this case, going out to the September 19th expiration. I'm going to be buying a 205 call, selling a 210 call. Again, I'm looking for that move to the upside to have, you know, some legs to it. If we break over 207, this one's done for a $2.40 debit. It's known as an in-out spread, kind of one strike in the money, one strike out of the money. Again, look for the gamma squeeze in the days to come.
Okay, in-out spread there. All right, Rick, take us through what you notice about this chart for Alphabet Google.
Yes, once again, a gap level has come into focus here. In this case, though, we did fill that gap. 207.05 was our high point there. That was also the candle. Kind of funny that we had our high point, and then it was right before we had this large collapse that was spurred on by earnings here, and then we hit our lows during that tariff news shock. But from there, we have a couple of areas to consider here. 193 and about 203, those are our green and red lines respectively here. You can see that price had a bit of a struggle, making a convincing push above 193. But now we've filled the gap, and we are hanging out above that area, right on the verge, though. So 203 will be an interesting area to watch. That will be an important point for the bulls to hold on to. If a failure there could open the door to move lower once again. We do have our 21-day exponential moving average here, our yellow line right around 196. That could provide a point for price to solidify. You could also consider this was kind of the top of the range, and then that was the low point as well, near about that same 196 level or so. So that could be one area to watch out for. We can see RSI is showing a downward slope there. We are still seeing a little bit of bearish divergence here. Price making new closing highs, RSI trending downward. It was bouncing back and forth into that overbought area. Now we are drifting below it here. So a sign that perhaps momentum is slowing down as we are stuck near those old highs. That doesn't mean it's going to go downward, though. It just means that perhaps things are taking a bit of a pause as traders reassess the situation here. If we were to look more toward the downside, the level we mentioned before, that 193 to 196 level, that's where the heavy volume is. That's also where our +1 standard deviation channel is. So a notable potential supportive area. Then our +2 channel comes in just above those old highs, 209.56. That could be a guideline for where to look for a pause if there's an upside breakout.
All right. Thank you, Rick. That's Rick Ducat, our lead market technician, and Don Kaufman of Theo Trade. Thank you both for today's Big Three.